What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I got a lot of messages on Twitter and Instagram why I don't like AGNC stock and if I could do a dividend stock review on them. I just want to let you guys know tomorrow I'm going to do a dividend duel with 2 monthly dividend stocks. I was actually surprised at the poll that I posted on Twitter with these 2 monthly dividend stocks. I actually thought people would favor the other one than what I put. So I'm going to compare those 2 dividend stocks and why I like the one that I kind of favored and assume that people would vote for over the one that won. So let's do a stock analysis and dividend stock analysis on AGNC. And again, I'm pumping videos out like crazy. I just finished my exam. I'm not too happy with the score. I mean, I'm still doing really well in the class, but it was a rough one. I just made it passing, but hopefully she'll give us some points. But that one sucked. And this one sucks too, that I'm going to review to you guys, and I'm going to explain to you why. So let's check this out right now. So AGNC is a mortgage-backed real estate investment trust, symbol AGNC, has a dividend yield of 10.88%, PE ratio 10.81. Again, we want to look at FFO when it comes to REITs. Volume is 9.35 million. The market cap is 6.92 billion. Year range is 1217 to 1884, and its day range is 1319 to 1344. Now, if you got the dip when this took a huge hit at 951 or just way down there, okay, kudos to you. I mean, I can understand holding on to this and just reinvesting the dividends and letting it fly, because a lot of people bought Prospect Capital when there's a huge dip and are just reinvesting the dividends and capitalizing on the dip. So that's one thing. But if you're considering buying this now, and again, this is not financial advice for entertainment purposes only, you need to look into the nitty and gritty. First of all, I mean, I like to compare stocks against the S&P. These guys are not a good traditional Roth IRA stock because they're not even keeping up with the S&P. So another thing with these guys is a monthly dividend stock. I'll show you their trends. So what you like with monthly dividend stocks, if you want to put them in a traditional Roth IRA or your dividend portfolio, are there hikes? Are there dividend hikes? Is their revenue doing pretty well? How are they doing against competitors? And are they in demand? So let's look a little bit into AGNC. So AGNC is an internally managed mortgage real estate investment trust. They predominantly in agency mortgage-backed securities on a leveraged basis, financed primarily through collateralized borrowing structured as repurchase agreements. Our principal investment objective is to provide our stockholders with attractive risk-adjusted returns through a combination of monthly dividends and net asset value accretion. We generate income from the interest earned from our investment assets, net of associated borrowing and hedging of costs, and net realized gains and losses on our investments and hedging activities. We utilize an active portfolio management philosophy with the goal of preserving net asset value over a wide range of market scenarios. We were founded in 2008 and headquartered in Bethesda, Maryland. Hopefully I said that right. Our common stock is traded on the NASDAQ Global Select Market under the symbol AGNC. So let's look a little bit more into these guys and see if they're really worth it. And this is what turned me off with these guys. Check this out. And right here, looking at the revenue, it's 2014, this is in millions US dollars, 1,472, 1,466, 1,321. So loss of revenue, 1,293. Then 2018, 1,949. 2019, 2,842. There looks like there was a rebound. In 2020, 1,519. So it was going up and then it went down. There's a few other things that you need to look into with AGNC that is a big problem, and we're going to study the dividend history on these guys. Here's something that we need to look into. So a lot of these stocks or mortgage-backed real estate investment trusts, they go from quarterly to monthly, and already we see some problems. So right here it's $1, $1.20, 185, 150, then 140. It's dropping to 125. Then it's down to 105. and it's down to 65, and it's down to 22. It's a monthly dividend stock. Right now, they converted to monthly dividend. Then it's down to 20 cents. Then it's down to 18 cents. Then it's down to 16 cents. Now, this is before the pandemic. 18, 16, 12. Stagnant at 12. So it went from 20 cents, let's just say 22 cents, to 12 cents. That's something that's a major red flag. I like raises, okay? When you look at Realty Income, when I've done videos on them, you're seeing dividend hikes. When you did EPR properties, which I'll show you, because I posted a video yesterday, make sure you check out that link at the end of this video. Check this out. Now here's EPR properties from 2013. It went from 26 cents to 28 cents to 30 cents, 32 cents, 34 cents, 36 to 37, 38 cents. Then the pandemic hit, which I pretty much explained to you why the board pretty much put their foot down and said, we're not distributing a dividend for a while. So again, check that video out at the end of this video, or this one. They went from 25 and then they're starting to do hikes. Now they are 55.41. They're a little bit more expensive, but they're hiking their dividend and their revenue's going up. So that's one thing that's attractive. But we need to look at one more thing with AGNC. It's not just the past 5 years of the S&P. We need to look at the whole picture too to see what the heck's going on. So since inception, they were going up. Look at this. $20 up to 35, 36. And then they just kept on dropping and dropping and dropping and dropping. And they were looking okay and then dropping. And they're still dropping. So something's not right there. And that's the problem with these guys. Is since inception, they've been decreasing their price. Look at this. $29 in 2009, $32 all the way to 23, and they're down to 13. They're trying to recover from the pandemic. They're just not doing anything. They're not going up. They're going down. It's a downward slope. It's not progression. It's regressing. It's just not doing anything. So that's one thing about AGNC that raises another red flag, is that price per share has decreased over time versus stocks like EPR. Now you can say it's a given that they decrease their dividend and they decrease their price per share because they're a specialized real estate investment trust. But these guys have been going down for a long time and they're just not recovering from what they were at one point. And that raises just a major red flag for me. They decrease their dividends and they just don't look attractive. So let me know what you think of this video. Let me know what you think of AGNC stock. A lot of you guys that are new to this channel, you got to hit that notification bell. And I can tell a lot of you guys are new to this channel. And you guys are amazing. We're almost at 8,000 subscribers because you guys are asking me to do reviews on stocks I have done reviews on. And I'm like referring you guys to videos, and this is a big one that you guys really wanted me to do a recent review on and go in depth a little bit about AGNC and why I don't like it. So we'll do that dividend duel tomorrow with these monthly dividend stocks. I'm still surprised at the poll numbers, but I'm going to tell you which one I think is better. I own both of them. I'm long in both of them. I think they're both great stocks, but I favorite one of them and like them better, and I'll show you why. You guys take care and have a good one.